I mean, if you let's just pick up on U.S. dollar strength right now. I know that the Fed still needs to make its decision, but really it's overshadowing kind of the currency space as well. How do you think it's going to deter the Fed if the strength keeps up?
Strengthen the dollar. Yeah, look, I mean, it's on their list of issues that will play into their decision, but in the end, they've got to accept that the dollar will be stronger if they're pretty much the only central bank in the world that's raising rates. So I think they are really very confident and intending to raise rates at the December meeting. That's about, say, 2/3 priced at this point. So there is room for more to be priced in, but of course there is room for things to go wrong as well. So I think as far as the dollar strength and their ultimate decision, it's probably going to be one of the reasons that they're very slow to raise rates again. So in this case, it looks as though it'll have taken them a full 12 months to follow up on the first rate hike. And our base case is that they take at least 6 months to deliver again next year.
All right, and we got to talk about the yen here right now because as we've seen, it has strengthened this past year. In fact, I want to get into the Bloomberg right now and just show you the performance of the Japanese yen year to date. Right now, it's at the 104.78 level. What do you think the BOJ is going to do this week?
Not too much, you would think, after they delivered the new yield curve control measures at the September meeting. But the commentary will always be of interest. They've got to update us on how they plan to get inflation to close to target. Core inflation running at about 0% year over year. It's really trended pretty steadily lower over the past 6 months or more. So they do have their hands full, but there's not too much pressure on them for this meeting. I think most BOJ meetings this year have produced a lot of volatility, but I think the expectations are probably low enough at this particular meeting for them to hold steady without causing too much damage. But the clock is ticking if we don't see CPI start to pick up over the next few months.
Sean, a very good day to you. It's Manus in Dubai. When we look at cable and euro sterling this week, we've got Carney and Super Thursday. Over the weekend, we got the press reports in the United Kingdom that Carney's about to make his decision in terms of staying or going. Sean, would it really debase sterling further or unsettle sterling further if Mark Carney, for personal family reasons, decided to leave the Bank of England?
I suspect not. I mean, that's the key point, isn't it? What you don't want for sterling is for him to be pushed out the door because the politicians don't like the way he's doing his job. And we saw that with Paul Volcker if we go back a long way. So I think if it is for personal reasons, it's obviously not his home country, then it would be... there's a lot of talent at the Bank of England or externally if they want to go again there. So I don't think whether he stays or goes, if it's really driven by that those personal factors, then it shouldn't be critical for sterling.
I caught up with Adam Posen from the Peterson Institute on Friday before I came out here, Sean, and we were chatting about what the realistic level is on the uplift for inflation. What do you guys pencil in for inflation going into 2017? And the other thing that I want to get your opinion on is cable has done all the aggressive lifting, not all of it, but most of it. And Posen suggested there was much more to come on euro sterling than there is on cable. Would you concur with those two thoughts?
Yeah, look, on inflation, I think the rule of thumb for around the world really has been that you should probably expect less pass-through to inflation from currency depreciation than you might have historically, that the global factors really are so strong that while the sterling fall has been spectacular, that the pass-through to inflation overall really won't be that remarkable. But obviously base effects on oil as well will help headline inflation, so you could be in the 1% area next year. But as far at the euro, look, I think it's very euro sterling, whether it has to go more. A lot will really come down to what the ECB decides in December. So I'm really not sure that we're going to see much resolution on that front. And I do note, though, that speculators are hugely short euro at the moment. So there is potential for euro to strengthen against the US dollar in terms of repositioning. And so that may have an impact on sterling as well.
All right, I'd be remiss without asking you about your home currency there, the Aussie dollar. And right now, we're taking a look at it. What do you think fair value is there for the Aussie, especially ahead of any RBA action? And I pulled up the chart for you, by the way, a one-year chart for you, by the way, on the Bloomberg terminal. Take a closer look here.
Yeah, look, for fair value on the Aussie, we'd say about 77 cents at this point is the middle of the range. So on the positive side, we've obviously had a very sharp rise in commodity prices. So our basket, which is available on the Bloomberg terminal, the Westpac Commodity Futures Index, that's up about 40% from the end of May. So that's very, very supportive. But on the other hand, yield spreads aren't quite as helpful for the Aussie, and certainly not against the US dollar, with more and more being factored into the Fed. And if your fair value model has a risk component, then volatility is picking up a little bit and probably will continue to do so. So that also helps keep a bit of a lid on the Aussie. But at the moment, I think anywhere in from 75 to 77 is about reasonable for the Aussie against the US.
Well, Sean, taking a look at another currency, no probability of actually getting to fair value, especially with currency and capital controls over in China. I've pulled up a one-year chart here in the Bloomberg terminal. Take a look right now. And you just see, just this past year, I mean, it is getting weaker and weaker. It's causing a lot of stress on the mainland and a lot of stress on the offshore markets as well. How does this impact countries that do depend on China for trade, like Australia and New Zealand and the like?
Yeah, look, it's been a bit of an interesting one as far as these concerns that we have of potentially ongoing depreciation of the yuan against the US dollar, but also against the basket. On our measure, it's down about 7% year to date against its currency basket. So it is softening. And for Australia, though, it actually works two ways really. While obviously the price of Aussie exports could rise for China, certainly has over the past few months. This fear of depreciation does tend to see a bit of extra demand for commodities denominated in other currencies. So we've seen a part of the flurry of trade on commodity futures markets in China does seem to be fear of a weaker currency. So that perversely, that's actually been one of the factors that has been supporting commodity prices and therefore helping the Aussie.
Sean, we started this conversation with the dollar. Let's circle back. We've got, if you've got your terminal out there, go to Elects Go. You'll see the shift in the polls from Hillary. Her lead over Trump is dissipating according to one or two of the polls that we're looking at. This is the peso, the Trumpometer. Give me your top line. We've got less than 2 weeks to run to the US election. Sean, just looking at this, the peso could do a bit of legwork down to those lows before this election, couldn't it?
Yeah, it could keep going if the polls are going that way. It is the most sensitive by far, as we saw that on Friday afternoon in response to the FBI headline. So that's probably your most reliable trade if you're playing for tighter polls in the next week or so, which I think is a pretty reasonable trade. Aussie's shown itself to be a little less sensitive, but the Japanese yen, perhaps that sort of yen Mexican, that's the two extremes. Perhaps that's the most sensitive currency pair of all in terms of playing for tighter polls and that increased uncertainty ahead of next week.